everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief Midweek Edition. Today, we're going to talk about the WTI Crude Oil Inventories Report. A massive 16 million barrel build. Is the United States output finally coming back online to levels where we were sort of expecting last year when Trump was inaugurated? I don't know. We're going to go ahead and take a look at that, but you're definitely ticking higher. We're only 3% beneath the 5-year average for oil stocks here in the United States, and that's a big deal. So we're going to go ahead and take a look at that. We're also going to look at the Australian dollar, Canadian dollar. We're going to take a look at that one. Natural gas, I'll definitely look at that trade idea. USOIL, we have a trade idea out there that's doing very well right now. And we've also got a crossover develop in that silver market. We talked a lot about potentially what could happen in silver, and we're seeing it. We're seeing it unfold right now, so the 920 crossover's off and rolling for your silver market, so I'm excited about that trade. I think it was a pretty good one. We were looking at a daily crossover for that. I'm going to actually dial it back to a 4-hour chart, and I think that you're going to see exactly what it is to really understand having a bullish bias, the difference between having a bias and being able to trade something. Two very different things. Just because we have bias, just because we're bearish or bullish, does not mean that we can just jump in and trade it. We've got to have trade location. We've got to have a way to get out, and we've got to have a way to get in. And a lot of times, all we need is a very simple strategy to understand exactly how to do that in real time. So good to see everybody back in the room. Yes, sir. Good to see you. Yes, sir. Welcome. Jason Maxon. Good to see you, Jason. Welcome back. Tuku. Good to see you, Tuku. Ralph H. Bobby Bob. Lita. Let's see. Andrea Garwell. Good to see everybody back in the room. Let's start off with a request here. I was at a request from Andrea. I wanted to take a good look at this Aussie CAD. Now, this Australian dollar, Canadian dollar, we had a nice trade idea that developed for us a while back. It was a pullback buy, and we just didn't quite get the entry. And I've sort of been struggling with that today. I had a couple of levels in U.S. oil that were fantastic that I was looking at, didn't quite get them. Had a level developing in the Euro FX futures and didn't get that one either, just by a few ticks. So that's part of doing business, and it's frustrating. It's absolutely brutal to sit there and wait and do the analysis and not get your level and then watch the market take off, but you cannot worry about it. You can't let it bug you. You can't worry about it. If you're missing too many entries, then you have to adjust your strategy and become more aggressive. But as far as what we're doing right now, we're coming up on the end of the second trading month of the year. And it's not the time to be overly aggressive. If you're going to be aggressive and you've had a good year, good January, good February, March is going to be the month to be aggressive. 31 days in March, a lot of trading days in March. You're going to have a chance to get in there and be aggressive in March. Now, I don't have a problem with anybody trading big and going after the brass ring in March and April, first half of May. That's the time that you do that. Right now, it's important that you evaluate your performance for the past two months. If you're doing well, if you're seeing the market well, if things are going well, then yeah, you get in there with your profits and you see if you can make a real run at your financial goals. If you're not doing well, you got to figure out why. So one of the reasons why many people lose money, and almost everybody loses money, because they're impatient. You cannot be impatient in this game. I've been frustrated all day today. I had some levels come into play. Two or three in WTI Crude. Only got one of them. I wanted the other two. Didn't get those. That's okay. Wasn't real pleased at all about missing my my Euro FX entry. Euro FX short right up there was good for about 10 ticks. Didn't get it. But it's all part of the psychology. You have to be able to turn the page when you don't get your levels. The biggest thing people do that's a horrible mistake is when they don't get their levels, they dive into the market right away and they say, okay, well, I'm gonna get back right here. I'm gonna chase it. You can't chase price around the screen. If you chase price around the screen, you're going to lose. I almost guarantee it. And we're not supposed to guarantee, and we're not supposed to say, believe me. If you try to just buy the market right now on this Aussie CAD, you're like, oh, man, I had that pullback at 95. I wanted that one. I didn't get it. 97.41's great. You can't do that. You've lost your edge. You don't have an edge anymore. You got to go back to the drawing board and find a new edge. So a lot going on here in this Aussie CAD. We're going to go ahead and start there. Wizard Alvin, good to see you. Wizard, welcome. I'm sure it's awfully late or awfully early, wherever you are in the world. Down, let's see, you're down in New Zealand, I believe. So that would make it probably pretty early in the morning or in the middle of the night. I'm not sure. I can't remember how far the time zones are in that part of the world. But welcome. Good to see you back live. Let me see. MF, oh, wow, where do I start? New. You're brand new? Well, just go ahead and ask some questions. MF, welcome to the stream. Definitely want to get everybody involved as much as I can. So if there's markets you'd like to look at, go ahead and do that. I'm going to go ahead and show you the 9 EMA here in a second. We had a banger. 9 EMA got us long in that gold trade yesterday, and that's been a great one. We also had a couple other setups that we're looking at there. T. Marina, good to see you. Happy hump day, T. All right, everybody. This is a good look at the Aussie CAD. Now, anytime you see a big move like this of about 3%, you've got a problem. You've got really a problem right there, 2.75%, 3.5%. And the reason why I say you have a problem is because the train really has already left the station. We had pullback buys down in there. We didn't get them. Fine. What do we do now? Well, when I see a breakout like this on a monthly, I always go back in the Wayback Machine, and I say, okay, markets have memories. History may not repeat, but it damn sure rhymes. So what can we say about it? All right, we've got sort of a sweep high up there. A lot of folks are going to say that that's a liquidity sweep right up in there. Okay, fine. This is the area that I'm looking at very closely. This zone right here back in February 2021, that's the 2021's highs. And you're looking right there at, 99.93. So what do you think that means? 99.93, huh? It's right there at par value. Big round number. Par value, hugely important. What are we expecting? Probably expecting some sellers right up in front of there. So we're at 97.41. We're cruising towards par value. I still have no problem with being long. I would love to be long. In order for me to get long in this market, I would be looking at maybe a 4-hour chart, something like this. Maybe getting that pullback somewhere down in this zone after we get a swing high to set up. You can see just how aggressive the bidders have been. They've been extremely aggressive. Right there, spike low, spike high, pullback, 38% bids, aggressive bids from 97. That's 100% correct. So how can we do this maybe on our next wave? You're just going to work right from that spike low on a 4-hour chart, somewhere right down in there, and you're looking to buy pullbacks. It's not a bad trade. It really isn't a bad trade. Just keep a close eye on your economic calendar. Not much going on in the United States this week. Not much at all. So if you're interested in maybe taking an Australian dollar, Canadian dollar trade, keep a close eye on that crude oil market. Keep a close eye on that gold market. Right now, gold is up about 1.25%. That's bullish for the Australian dollar, and the Canadian dollar sort of struggling a little bit. WTI Crude Oil is in complete rotation, right around 65.50. Not necessarily the best market to be trading today, believe me. It's been a little bit frustrating from my end, but we did have a really good trade in there develop earlier today. So 700 hours, Wizard Alvin. All right, bright and early then. That's good. I like getting up early. Typically get up very early every morning. Maybe need to take a vacation, get some sleep one of these days. Let me see. Yes, sir. Take a look at the U.S. dollar, Japanese yen, if you please. I'm glad you brought that up, yes, sir, because that sort of segues, and I'll show you my Fibonacci's for that as well. But 9 EMA strategy. Remember, if you guys are looking for somewhere to start, if you don't know any strategy at all, if you're a brand new beginner, so MF, if you're a brand new to the markets, check out our 9 EMA. I put that link in the YouTube chat. Be sure to check that one out. That can get you up and running with just a basic strategy. Enter your email address, unlock the strategy pack. It comes in a zip folder. Unload that zip, and you've got a custom-made EA from yours truly. And then you've also got a PDF in there that shows you everything you need to know about that 9 EMA strategy. So a lot going on here. If you're interested in that type of strategy, let's go ahead and see what this one's done in action. Now, this would have been a tough one to hold on a 30-minute chart. This would have been a tough one, but, I mean, it's turned out to be extremely profitable. Extremely profitable. Right there was your bid right in this zone. You can see our gold carat came up. There was our bid, and we sort of had a nice pullback here, and we sort of rallied to the top side. Now, remember your stop loss. I always recommend putting it beneath that previous swing low, not just the signal bar itself. You'll notice you got chopped out of this before you rallied. So interesting stuff right there. And once again, these are demo dollars. I'm not trading real money on this MT5, but you can see we made a little bit just on carrying one lot. Now, for where we're at right now, and I'm glad you brought up the dollar yen, you can see that we've got a couple of trades that have developed. Number one, 30-minute chart. 30-minute chart on this Forex pair is not a bad one. I like the 4-hour chart for Forex because I can trade that 24 hours a day, 6 bars per day, and then we're off and rolling there with position trades, and I like that. That's what I prefer trading Forex if I'm not scalping FX futures. All right, that's something completely different. Maybe we'll do some live scalping one of these days, but I sort of got the big thumbs down from the back office on that. So I don't think we're going to be trading real money anytime soon. But I can sort of show you the schematics of how to trade with demo dollars, and you can see you had an interesting sell right there. You had a potential opportunity to grab a little bit of a downtrend over the course of a 24-hour period or so. Then you had the big rally, which is fine, and now you've got that next signal that's coming in. It was really a pretty good sell. I mean, you could have theoretically already be out of that. So are we short or are we long the dollar yen? I talked a lot about the dollar yen yesterday and broke down what I thought of it. As far as what we believe is going to happen with the dollar yen, I'm pretty much bearish. But that doesn't mean that I'm stupid. When the market rallies and breaks against us, we don't just sit there and say, okay, well, it's going to come back our way. We don't do that because we don't want to lose a fortune. We don't want to blow our account out. We want to be smart about our trade location. Yesterday, I talked a lot about trade location. It really is. I mean, it's the having the discipline to wait for a good buy or a good sell is what this game's all about. And if you don't have that, you need to go find it, because if you're not disciplined and you're not patient, you're going to get destroyed more than likely. And I don't say that to be mean, and I'm not trying to put anybody down. I've been doing this for 5 years, just on live stream. I've been trading for 15. And I can tell you that I've talked to traders all over the world, some with a great aptitude, some that are just beginning, some that are aggressive, some that are passive. The one thing that all of the successful ones have in common is they're patient and they stick to their guns. Now, if you're an aggressive trader and you want to get in and make 50 trades a day, do it. Be consistent with your execution, but do it. I don't have a problem with that. Or if you're a passive trader and you want to take maybe 1 trade a week, 2 trades a week, go for it. Do it. Just stick to your guns. Be disciplined. Wait for your trade location and hit it. So when I say that I'm bearish the dollar yen, it's not necessarily that I would sell right now, although we do have that signal that's up on the 9 EMA, so maybe we could do that. But this type of trade right here, would this go against my bearish sort of predisposition on this market? No, it wouldn't, because it's a different trade. It'd be a scalp. 4-hour chart, 38%. You got a sweet bump right there off of a quarter. That's a great scalp. 156.26. Maybe you're buying 26. What exactly did we get paid off? It's fantastic. Up there, 156.38. So what'd you have there? 12 pips. Nice 12 pip scalp. That's fantastic. That's a quick hitter. You're in, you're out. I have no problem with that. None at all. That doesn't mean that my bearish bias is faded over the next 6 months. Doesn't mean that at all. What it means is we got a pretty good short-term support line. If we're tick scalping or pip scalping, that's the kind of trade that we're making. We're in there, we're in, we're out. We're looking for 5 pips. We're looking for 8 pips. We're looking for 12 pips. Right now, the spread on that dollar yen is about 1.5 pips. So that's going to make it a little bit tougher to scalp. Tick scalp anyways. You're going to have to get a minimum of probably 8 pips to make this worth your while. But it's a pretty good trade, and it wasn't a bad one. Has nothing to do with my overall view of this market. Nothing at all. Now, let's go ahead and pull up our technicals here. Let's go ahead and just back off, go top to bottom here, monthly chart. Now, one of the great things about the How to Trade community and the Switch Markets community is a lot of us in here aren't too new to the markets. Pretty much most folks in here know how to read a pricing chart. But if you don't, it's not a problem. You just need to brush up on your sort of your aptitude. What does all of it mean? What do all those candles mean? It's where price has been, right? So price sort of rallies, it comes down, it goes up, green for up, red for down for a given period of time. This is a monthly chart. Very important that we always understand where our macro levels are. Look at this spike high right up there. What is it? 161.95. That's right around 162. That's the big fish. That's the big kahuna in this market. So right now we're looking at 156. That's about 600 pips away. So is that tradable? Is that even realistic to look at right now? Not really. Do we have any other levels? I would say yeah. If we were interested in taking a short, where would it be from? Probably want to challenge of those highs to get great trade location. Great trade location. That's exactly what I'm looking at. 160, anywhere from 160 up there to 162. That's fantastic area to be building a short. Now this high right here is interesting. That's January 2025's high, right? So that's last year's high. Markets have memories. Look what we did in January 2026. We went up, we tested it, and we reversed. Now that's one of the reasons why I think the bearish side of this market's probably the right one to be on. Do you want to sell right now? If you wanted to, you could dial down your leverage And you could sell right now and stop yourself out above the yearly high. I think it's risky. I don't really like it because we could easily get that creep, that FX creep, where we just sort of grind north, accumulate over the next several months, and then we start to get our rate cuts, and that really is when you're going to get the reversal in this market. So, even though there's nobody out there really favoring the yen over the dollar, and I'm not really saying that the yen is going to put on an absolute show against the dollar in 2026, but I can build the case for the bearish side of this market. But for me, the trade locations just aren't even close to being good enough. They're not what I want at all. I want to sell up in here. We're not there yet. So if we rally, let's say we rallied right up here to this zone, maybe 159 even, somewhere in there. Could I build a short from there? I could. I just have to stop myself out. So if you wanted to do something like that, your yearly high, 159.45. If I want to sell 159s, it's doable. You stop yourself out up above January's high. It's a riskier way to trade. A lot of traders do that. It's risky because everybody's going to know where your stop loss is. More than likely, you're going to get that run before the reversal. I'm holding out for a winner. I'm holding out for a hero. I want to get a good trade location where I sit there and I go, yes, we have a high probability of winning. We don't have that yet. It's just not there yet. Now, as far as my buy side of this market, you can see the big volatility that we got in January. Pretty good volatility in February, but we're inside of January, inside month, right? Spike low there, spike high. As we roll into March's trade, I'm still watching 154 closely. That's robust downside support. 152.39, we've painted that area twice with this yearly lows. Could we go up from here? Of course. Could I be completely wrong? Yep. It's certainly possible. But we understand that if I'm looking to sell, I don't need to try to force it from here unless I'm short-term scalping on like that 9 EMA or something like that. Two very, very different things. Very, very different trades. Intraday scalping as opposed to maybe positions. When somebody says, Shane, are you bearish or bullish? Typically that means a position. So I'm really neither right now. I've got a bearish predisposition towards this market, but we're just not there yet. The locations are not good enough. I'll let you know when they are. And once they are good enough, then we'll go get them. Let me see. SV Thor. Good to see you, SV. Welcome. Morning, good evening, good afternoon, wherever you may be. A lot of morning traders. Yeah, that's fantastic. Been sort of a dead session here. Not really that great. After the State of the Union address last night from Trump, not really much there that was going to shake our markets up. I watched it. I watched most of it, and then I went to bed. But it was a long affair. We were looking for verbiage out of Trump on Iran or Mexico. We didn't get any of that. We got promises of new tariffs. We'll see what exactly those are going to look like. Nobody knows. We had a lot of, I would say, open arguing in the chamber of Congress. People yelling at each other back and forth. Pretty ridiculous at how far things have fallen. It used to be a fairly civil engagement, and now it's just people yelling at each other. But Trump did go for about 2 hours, 2-hour speech, covered everything. A lot of nationalism in there. I didn't hear really anything that we could hang our hats on as traders economically. There was a lot of talk about tax cuts and, bills, government spending, all that. I think it's already all been priced into the cake. What we wanted to see was some sort of talk on Iran. We wanted to see Trump talk about hitting Iran. That's why everybody was tuned in. They said, okay, is this guy going to declare war tonight, or what's he going to do? Didn't do any of it. Avoided it. That should come as no surprise. But we just didn't get the hints that we were looking for last night. I didn't see anything that would move the markets, and it didn't. Really didn't. We could sit here and say, oh, it's a big up day, Shane, and look at silver. And I go, I guess we could say that some of the statements about AI and the data centers and allowing companies to manufacture their own electricity, basically hinting towards nuclear, towards power plants, privately owned power plants to facilitate the energy needs of AI. Maybe we could say that drove the consumption narrative end for silver. Maybe. But personally, I don't believe that. That's already been cooked in. We cooked that back last summer. We cooked that into the market. So it was just a nothing burger as a speech with regards to our markets. It didn't tell us anything. You always have to be on your toes with Trump, though, because you don't know. You just don't know. All right, let's go to one of our trade ideas. Going to give you a trade update. Up next, Trump delivers the State of the Union address. USOIL is in play. This is one that I put out yesterday afternoon. Was before the big event, and you can see exactly what we got. It worked like clockwork. It really did. You've got a rally right up here, 65.73. 65.73. We printed 60s forever, it seemed like today. The pullback was sweet. It was 65.21. We were buying 26s. Yeah, that's easy. That was a 35 pip. I believe we were looking for 35 or 38 pips Profit target was 64 up there. It was pretty easy. It was not hard. This trade never really went against you at all. The 30-minute chart right there. Nice. I mean, this is exactly what we're looking for right there. Boom, boom, out go the lights. There it was. We had some secondary entries down here, which are fine. Then you had sort of that's just robust compression right around 65.50. I've been watching that all day, and it's been boring as sin. But there you go. There's the big break, and now you've got 65.78. So that one printed relatively straightforward, easy winner. We've had a few of those this week. It's been a lot of fun to trade this entire year. I mean, we've very, very few of these trades have gone wrong. But there have been a couple losers, but realistically, we haven't had one in a while. We haven't had one in a while, so it's been a pretty good year for what I've been looking to do. Now, this is a trade idea that I put out earlier today. This is going to be a longer-term one. This isn't one that's going to come into play anytime soon. Well, I shouldn't say that with natural gas. Natural gas has a way of being crazy. But this right here, I just want everybody to be aware of 2025's low right down there at 2.639. This is a daily chart. You can see we're printing about 3.128. Now, the reason why I would bring up a natural gas is because you're going to start seeing volatility in this market. Believe it or not, we're coming into selling season for natural gas already. End of February, it's starting to get bullish for WTI crude, and it's starting to get bearish for natural gas. So the key level for me, looking at this chart, you can really see the weekly breaks. Now, this is a CFD, and you may be in a position to be trading natural gas futures. That's great. Or maybe a different CFD product. So the actual price point may vary. It really may vary for you depending on what brokerage you're using or what product you're trading. The key that you need to be looking at for natural gas is 2025's low. Now, that could be different. If you're on a futures contract, I guarantee it's different. If you are trading some a sort of CFD as opposed to this NATGAS CFD, then you're probably going to have different numbers. That's just the way that it is. But 2025's low is where you need to be looking, and you can see that was developed right there back last summer in August. I mean, guys, it really is seasonality. And there you are, you're over, and then you get into the fall, and then you get the explosion. There's the bid. Now, this sell-off, dramatic. Really a dramatic sell-off, and then you get the big push. A lot of this was all about geopolitics, especially when we're talking about Russia-Ukraine situation and the impact that has had on natural gas over the past 4 years. It's already 4 years since we saw the invasion, Russia invading the Ukraine 4 years ago. 4 years. 4 years of this. Not really much to say about it. Clearly, a deal's not going to be made anytime soon. We really did think there was a deal in the offing right away. I don't know if you guys remember 2022 when this whole thing kicked off right about this time of year, the big massive run we had in natural gas. And then we had the Biden administration threatening huge sanctions, demonetization. They claimed that it was going to end the war within 3 months. So what did Moscow do to retaliate financially? They've made it very, very simple. You're going to purchase natural gas from us in rubles, and we're going to peg the ruble at least partially to gold. And that was the end of the sanctions from the West. There was nothing else to really say about it. Now, it's a complex situation. I'm not going to sit here and claim to be a geopolitical wizard, and I don't want to get in any arguments over it here. I will tell you this. Whatever the West has tried to cut a deal or to get this done, it has not worked. So both sides, even though we hear Trump say, yeah, they want to make a deal, what are we supposed to think? There's no deal coming, not anytime soon, right? If there was a deal coming, what do you think that would mean to natural gas? Would it depress prices? Potentially. We could say that, well, maybe there is some optimism right here. Maybe there was some optimism developed in February that we were going to get a deal. I'm sort of in the camp where we've been down this negotiations road so many times between the West, Ukraine, Putin, everybody, that I'm not holding my breath or getting my hopes up because we have been on the brink of a deal how many times in the last 4 years? How many times in the last year? Maybe a dozen. I mean, there's always been that idea that, okay, we're going to get a deal here, and that's going to greatly impact our energy markets. I haven't even talked about the wheat markets yet, Black Sea wheat. It doesn't matter. Until we see a deal, it's not going to happen. So the markets are cool with that. They've accepted the fact that there's no deal coming. They price these things accordingly. So in my view, that swing low that developed in natural gas back there on the 25th of August, somewhere down in there, you're probably going to get a test of that zone and probably a bounce off of there. So keep a close eye on that zone. That potential level is being one to watch as we roll deeper into the year. Let's see. We've got a few other questions here. Let me see. Harsh. Good to see you, Harsh. That was sort of a harsh assessment of the deal making going on in the Russia-Ukraine situation, but it's the truth. We won't know if we're going to get a deal until we get one. That's the reality of it. Euro, Japanese yen, more than happy to look at that. Ralph H., what will a deal do for the U.S. dollar? Well, I mean, theoretically, probably send it lower. Believe it or not, the dollar is sort of a safe haven. It's not a true safe haven like gold, silver, or even the Japanese yen from a diversification standpoint. But the U.S. dollar is always sort of viewed as being, the ship with the least amount of rats on it. When everything else breaks down in the world, a lot of folks pile into the USD. So some of that angst maybe in that region. The geopolitical angst is worldwide. I mean, let's just be honest. I'll be honest with you guys. The geopolitical situation right now is incredibly sticky, and it's messy, and it's all over. There's hot regions and there's potentially hot regions all over the world right now. One of the things Trump said last night was he ended 8 wars, and nobody really buys that. We were not sure that any of these wars have been ended. They've been paused, but there's skepticism that the U.S. Iran are going to war, and there's a lot of talk and scuttlebutt around that. That's a potential another hot front on the geopolitics. You've got Russia-Ukraine, which doesn't look like it's going to end ever or end anytime soon. You've got that. You've got China-Taiwan, which is the one that most people here in the United States believe is going to kick off in the next 2 years. We've heard timelines. 2027 is when China wants to move on Taiwan by 2027. Now, I'm talking way out of turn. I'm talking as a trader. That's somebody who's been doing this for a while. But I can tell you that those events are all going to really bring participation to your safe havens. They're going to drive gold. They're going to drive silver. They're even to a certain extent going to drive the U.S. dollar. Now, if we start seeing peace deals, then you might see some of the air come out of the DXY, and that's what I'm waiting for. I think 2026 is going to be a bad year for the dollar. It's going to come way off, rate cuts, and maybe you do get a couple peace deals. Maybe there's a peace deal in the offing for this summer sometime where the Republicans and the Trump administration can claim victory by negotiating a peace deal just ahead of the election. That would really help them in the midterms. Yeah, it's possible. But what we're seeing in Mexico, U.S. Iran, China Taiwan. What can we say? I mean, it's a powder keg. The entire world's a powder keg right now. It's not just a conspiracy theory. It is. And so we have to do our best we can as traders to try to stay insulated from those things. But we also have to be a realist about it. Believe me, I'm a cheerleader. I want everything over and everybody to live in peace and move forward. But we have to be realistic about the different factions here and the different folks with different interests. And at the end of the day, the world has X amount of resources. It's what everything's always about is resources. Don't forget that. It's about, land mass. It's about food. It's about water. It's about economics. It's about all the different things that basically come back to scarcity. That's the reason why you have wars. We could talk about the ideology of all of it. We could talk about that, but what does it really boil down to? It boils down to resources, and that's why I'm a big commodities trader. We have a pretty good idea how commodities are going to move given certain stimuli. So, Ralph, it's a great question. What would a deal do for the U.S. dollar? Probably let a little bit of air out of it. Probably send it lower. Are we seeing that? No. We don't see that yet. All right, Euro Japanese yen. Great question there, Harsh. Let's give it a shot. As far as what we've got here is just a very basic. This would be a very basic Fibonacci retracement, something like this. You can see that we are light years away from that. If we tested that 175 area later this year, I would say back up the Brinks truck. You've got a 13-month EMA right there. That would be the level of all levels. It doesn't really do us much good. I mean, that's pie in the sky to be looking at that now. What we need to do, we need to get in our way back machine and say, okay, May of 2002, you've sort of got that swing high that we took out just last year. What do we have going right now? You got a thunderous train. I mean, the train is just humming north, and it's humming north fast. So when faced with this situation, one thing that I always say is, listen, you can't really bet that any levels are going to be support or resistance in this area. You want to buy pullbacks, clearly, but take a look at what's happened here from a resistance standpoint. 186, you've seen a little bit of compression right around this level, 187 to 186. What do you think the next big one is? I would put 187.50 up on the board more than likely, And those aren't exact. You can dial these in perfectly. I'm sort of moving fast here, but maybe we're right there, 187.50, 190, 192.50, something like that, 195. And then probably the big dog is going to be 200, 197.52. I forgot that one. You say, why do you do it like that? Quarter handles. So let's say you have a 0 to 10 scale. Well, that's not going to work. Let's say you have a 100 to 200 scale. So you're going to have 125, 150, 175, 200. Dividing each 100 or each 10 into 4 quarters. I find that quarterlies are very important, especially when it comes to pricing assets like derivatives, currencies, commodities for sure. We were looking today at, the WTI crude, we were looking at 65 and a quarter to the downside. What was the low? 65.12, and then the bounce. So always be looking at those quarter handles. They're very important. As far as what can we say about the euro Japanese yen right now, I mean, is there any reason really to be trading it? You could say, well, that's an uptrend. So right here's a 30-minute chart. We could just build some Fibonacci retracements based on that. Maybe something like that. 184.30 is a nice pullback buy. I want to make my mistakes to the top side of this market, meaning I want to buy. I don't want to sell until we get up to one of those other areas where potentially we can make a little bit of money, maybe shorting 185 or something like that on a scalp. But this is just real basic Fibonacci stuff, real basic fractal geometry. Not really too much to it. Pullbacks, 184.16. Yeah, probably pretty good. You've just got to get that swing high to set up. And if we set up in here somewhere, maybe we get a different pullback zone. But as it stands right now, 184.16-ish, somewhere down in there, would be a pretty good bid to the top side. Not bad at all. So I hope that helps. A little bit harsh. Let me see. Mr. 360 Explorer, good to see you, MR. Mr. Sir, I can hold the natural gas call for tomorrow. Yeah, you can hold it until it gets elected, mister. I mean, that call will stay on the board until we test tomorrow's low. And so what you're asking there is, yeah, you are going to get the big inventories report yet tomorrow on natural gas EIA inventories. You need to be a little bit careful around that release just because the volatility is so crazy. But yeah, that market call stays on the board until it's elected. We've had market calls from 3 or 4 weeks ago. I didn't even review the Swiss franc. Remember the Swiss franc call? Does anybody remember that one? Some of my best work right here. This was a good one. The weekly Fibonacci retracement sequence, absolute clockwork. I mean, this was really good stuff. Spike high right there up around 80.40. Nice low. Came across the board on the week of the 26th of January. And this area right in here at 38% has been fantastic. Sort of blew that top off the first time, but since then, very bearish, very rotational, just beneath that 77, 71 area. Pretty good stuff there in the Swissy, that's for sure. Let me see. Babjeez, what's up, Shane? Do you trade the Germany 40, the DAX 40? No, I don't. I really don't. I don't trade anything foreign. I've been involved with the Nikkei, but right now, to be honest with you, I haven't even been focusing on the indices. I've been focused on the commodities end of it and the currency end of it. And it's been pretty good, but you're right. I mean, the time is coming to start getting involved with these indices, but I want them to break. I want the Dow to break 50,000 so I can bid with more, I guess, reckless abandon. We're seeing compression here in the Dow, 49.5. S&P 500, all of a sudden you're down beneath 7,000. NASDAQ hovering right around 25,000. So it's just rotation around those big round numbers that I'm not real key on. All right, we got a few things to cover here today. Trump's State of the Union, really not much there. I already talked a little bit about it. Not really even a huge market driver today. Not really. As far as news of the day, 30-year mortgage rates here in the United States came down to 6.09%. Really pretty good work over the past year to get mortgage rates down a bit. Mortgage applications week over week are up a little bit. I wouldn't put too much stock in that. I don't think that's a huge deal. Purchasers index and the mortgage market index, forget all that stuff. Those are all arbitrary numbers. Those are for economists and realtors. You let them use those. What you need to be looking at is the interest rate. That's what we're trying to use is really a barometer of where we think that the prime rate's going to go. Remember, a 30-year mortgage rate, those are lenders that are lending out into the long term. So they have a general base. Well, they don't have a general idea, but they have a basic premise on where they believe interest rates are going to go. And so anytime I see these mortgage rates come down, it means that they're anticipating rate cuts in the near future. So I always look at that as a barometer of exactly what to expect. But this is the number of the day. WTI crude oil inventories came in at 15.9 million barrels, a weekly 16 million barrel build. That's absolutely staggering. It hasn't really driven the market much lower today. And the reason why is it's all about Iran right now. It's about Iran, it's about a weaker dollar, and it's also about springtime seasonality for crude oil coming into play. But a 16 million barrel build should have sent the market directional for U.S. oil, and it just didn't. It just flat out didn't. So when I see something like this, I go, well, that's a big number. What does it all mean? Well, let's go ahead and take a look. This is the weekly and petroleum status report from the EIA. I've been referencing this for probably, I don't know, half of some of your lives. I've been looking at this thing for, going back to 2010, 2011. But there's just a few keys that you need to know. If you're going to read this, third paragraph's everything we're looking for right there. All right, let's have a look. U.S. commercial crude oil inventories, excluding those in the SPR, the Strategic Petroleum Reserve, increased by 16 million barrels from the previous week at 35.8 million. U.S. crude oil inventories are about 3% below the 5-year average for this time of year. That's pretty good improvement. We've been running 5% below the 5-year average pretty consistently throughout Trump's first year. To get this down to 3% is a step in the right direction. I think everybody wants to see that go positive just because the crude oil question is a leading indicator of pretty much everything that's going to happen here economically. If those supplies go down and prices go up, you're going to have a real problem controlling inflation, especially with prices really sort of entrenched at higher across the board. So for me, that's a big one. That's a big print. This is going to be a trend to watch. You can see right here, what's the significance of this? It's significant. I mean, that's the biggest week-over-week gain that we've seen. Let's go back 5 years. I mean, realistically, it's the biggest one since January of 2023. That's a big print. That's a big weekly number. Now you can see some weeks it's up, some weeks it's down, yada, yada, yada. Big picture is that is definitely a bearish market driver for WTI that just hasn't really taken root in the market yet. Fascinating stuff. All right, let's get out to silver. This was a trade that we talked about yesterday potentially as being good. You can see you've got sort of the crossover. This is our 920 EMA crossover strategy. It's developing in an interesting way. You can see that you're pretty much going to get a buy signal today on the end of, on the daily close for silver. Now, do you take that signal? You could. If you wanted to, you could. I really don't have a problem with anybody taking it. You're above 90. We've definitely broken from 75, which is where we were getting compressed. It looks to me like you could probably be looking at a runner back to 100, or you could wait for a pullback. Now, a lot of folks trade the 920 EMA. I hear from a lot of you. The pullback zone, a lot of folks really believe that you wait for it to pull back to your moving average, and then you take the shot at it. It's up to you, however you want to execute it. Those are the videos. The 920 videos are over on the How to Trade YouTube channel. Be sure to check that one out. Really a popular video we put out about over a year ago. But this pullback zone right in here, maybe potentially maybe a good bid from somewhere, maybe down in here, 85. Or you can just go at market on the close. Now, question really is are we too late? Well, I don't care about a 4 or a 3 hour chart. Let's go to our 4 hour chart. Are we too late? A 4 hours pretty tough, isn't it? Back on the 18th of February, you had the buy at 77, and now you're up here at 91. It's been just a breakaway winner, an outstanding crossover. I really like this strategy for trading things on a swing basis. This is a pretty good way to get in on positions. Right now, you're just sort of letting it run, and now you're getting that daily crossover that could potentially send this market a lot higher. It looks like this silver is going back to $100 an ounce. It really does. So I would be very careful with what I did with regards to shorting. I don't know that you want to be on the short end of this one. You're up about 4.5% today. That's really tough to argue with, isn't it? Check out our gold market on the 920. 4 hour chart, you see same day. You got that bid signal right around 5,000, and then you got the break, sort of a pullback there to 5,000. But really up and away for gold. Are we away from 5,000 just yet? Not really. 5,200, we could easily sell off and test 5,000. But it does look like there's a lot of bids involved to the top side of this gold and silver market. So I would be very careful with what I was doing. with precious metals. I say it every single day, but believe me, your margins are higher for a reason now. And the reason why is the daily ranges are absolutely astounding for gold and silver. So that's what I would say. I would say I'd be very careful with gold and silver. I'm not even really going to dive any more into the gold market than that. I cover it every single day. Everybody wants to know what I think of gold. And for me, it's just sort of a no-fly zone right now. A pullback. If we could get a pullback to 5,000, I'd probably feel pretty good about that. Daily 62% retracement right there at 49,997. 5,000 is your big round number. That probably would be a pretty good zone to take a shot at to the long. But if you want to be more aggressive, 38% is right there at 5,092, and that also lines up perfectly with your 9 EMA. So a lot going on here in the gold market, but I still am not confident at all in the direction of this price action, and I'm not that excited about it. I'm just not that excited about it. I'm sorry. If I was excited about it, I would tell you. I'm just not. Too many horror stories coming out of gold right now. A lot of people have been chopped up sort of relentlessly on the gold market, so I just want everybody to be as safe as you can be and don't get caught up in a mess. You don't want to get caught up in choppy junk markets. And right now, even though these intraday ranges are big, and believe me, there are traders out there that are making a lot of money trading metals, it's still really easy to get whipsawed out when these daily ranges are this big. I mean, these are big ranges. That's a 2.36% gain. That's a 1.63% loss. That's a 1.25% gain. I mean, it's every day. It's just seesaw action. We like a nice break. We like a nice break and then some rotation in a new range. Potentially, that bid down there is not a bad one. It's not a bad one, but we just have to be a little bit more careful or mindful about what we're doing with gold because it's a crazy one. It's an absolutely crazy one. Let me see. Lebo gang, good to see you, Lebo. Let me see. I always wait for a clean pullback. I don't want to amend that as a rule. I really don't, because a lot of times you get these clean breaks and you buy at market or sell at market and you just get off on the runner right away. But I'll tell you what. It looks potentially like the pullback to the moving averages is a great entry, a better entry than the original entry for the 920 and even the 9 EMA. You see it almost religiously pull back and hit the 9 moving average. So there's a lot going on there. There really is, but it's not a bad rule, Lebo. Let me see, Johnny. Good to see you, Johnny. Welcome. How do you get that gold colored candle for entry? Yeah, that's some of our code. I did this code a while back for the I did it for Pine Script, and the code essentially what the gold candle is when the 9 EMA crosses over the 20 EMA, the gold candle lights up, and that's potentially your buy. When it crosses under, you get a purple candle, and that's your sell. Those codes are available on that How to Trade the 920 EMA crossover strategy over on How to Trade on YouTube. How to Trade on YouTube. I guess I could probably find you the link real quick, but that's where it be. So this would be it. We're actually live there right now. You can see that's us talking. That's me looking into the camera. But if you go on over to videos, and you just go right up here, 920 code. And there it is. How to code using the 920 EMA strategy. Pretty good video, Johnny. So check that link out if you want. You can go ahead and get on that there. That's for sure. That gives you everything you need. And I actually did include the code. Let's see. I did include the code in the comments for that video. So it's like on the first or second comment. I can't remember. That's for sure. All right, everybody. I'm going to go ahead and sign off for now. A good stream. I sure appreciate everybody showing up for our midweek our midweek trading extravaganza. Right now, I'm running a little bit behind on my profit targets for this week just because today was so slow. Really, it's always a challenge to trade crude oil on EIA day. But still, we should have got at least a little bit more love out of that oil market and given us a couple more trades. And then also the Euro USD has just been very slow it seems like for the past several weeks. So a lot of times you just miss out on the trade. All right, everybody, one more question here, and then we're going to go ahead and sign off. Let me see, Lebo. Is it just me, Or does the RSI move quicker than the EMA? Sometimes I trade the RSI only. Yeah, I mean, you certainly can just trade the RSI only. For me, the RSI is always supporting evidence. It's always supporting evidence because when the RSI breaks, usually the market can start to trend. And the reason why I wait for my entries after that RSI has sort of been in overbought or oversold territory and then come back is because I want to know where the potential top or bottom of the market is. And if you end up just selling, like let's say the RSI breaks above 70 and then you sell, you're going to get caught up in a lot of trends, and those trends are going to wipe you out. Remember, there's a couple ways everybody loses their money in this game. One of them is over trading with crazy risk management, taking on positions that are too large, and the other one is fighting trends. If you consistently fight strong trends, it won't work for you, especially if you're trying to pick tops or bottoms. Now, if you're scalping, that's different. I mean, I tick scalp against trends all the time. But as long as you're in and you're out and you know where you have to get out, you're in good shape. But if you try to dollar cost average against strong trends, I would say that's the way that 99% of the people lose their money. They just get on the wrong end of it and they don't get out. So for me, the RSI actually does get you into those bad positions because it shows when the market's starting to break and trend, which, yes, it could actually get that exhaustion up there and rotate back down into your envelope. But the way that I quantify it and look to do it is I want to see that price action get really exhausted up above your overbought, and then that right there gives you a great stop loss potentially to catch a directional shift in the market. That's why the longer the time frame, typically the more luck you're going to have because you got a better range, but it's also riskier. All right, everybody, I'm going to go ahead and sign off for right now. You have a fantastic trading day. As always, trade the action well, and we'll talk soon. See ya.